All right, good morning. Are we live? Are we live? I lost my chat. Where did my chat go? I just had the stupid thing. There it is. I'm sorry, it's not stupid. All right, good morning. How are you? Not entirely sure if it's streaming. I can't quite see. It doesn't show that it is, but I think it is. I think we're good. Hey, how about some cool music? Oh, you don't even see it. I see where we are. Let's do that again just because it's so fun. Let's do it again. Oh, you still can't see it. Jeez whiz. Yeah. Boom. All right. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders, more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Cool. So we got an interesting day. Are you guys excited? We got big stimulus packages coming out of China, and nothing really has happened outside of a couple of European stock indices moving. Some of the commodities might be moving, but we have an RRR cut. We have a repo cut. We got some pretty interesting things going on, so you want to pay attention. Like I said, a few things are moving, but not everything is moving. Not yet. Okay. Super cool. So we got some of the things starting to move, metals and oil, commodities, they're all happening. But the markets are not quite open yet, so it'd be kind of interesting to pay attention. Now, the tools that we're using here, everybody knows, I think every single one of you is part of traders.com. But it's where we can do our fundamentals, our technicals. We even have volatility analysis now, part of a scalping news trading group. So very, very cool. So we always start with fundamentals. I already covered this, an hour and a half ago. So that's all done. You should have already had all that planned out. And discern whether there's a risk-on opportunity or not. Let me move some of these things out of the way. I have too many windows open again. Story of my life, take her home, spend her love until she's broke inside. All right. Let's move over to the technicals. I think most of you guys want to cover technicals. Wait, it just reloaded the fundamentals. Come on, click on it now. Come on. There we go. So anyway, what's going on? We're trying to see what direction trend is going. The interesting thing is the way that you answer the poll that I've popped, what are you trading day, risk on or risk off, dictates the way that you want to trade the market open. So like when you're looking at stock indices, are you a bull or a bear? And if you're a bull, you actually want to do like things like buy the dip, buy the dip, buy the dip, right? So Dow on a 15-minute, on a 30-minute is up. How about NASI? It's an up channel with a down move. So you may have just missed a neat little buy, Here it is on a 30-minute chart. You can see the same channel just with different context. DAX, look at that. Ascending triangle, which is really cool because when you see an ascending triangle, you should be able to assume, because you need a trend to get an ascending triangle. So you can assume that this was up. It was up. And the idea here, the continuity is continue to be up. That we will break that upper bound line, what I call the secondary line. Okay. Oops. Double check here that I got all the patterns turned on. Sometimes I turn patterns off. So you can throw in some Fibonacci levels if you want. You can throw in the breakout patterns that are not my favorite, but they're great for scalping if that's your thing. Okay, so looking at, again, the stock indices, are they going to open higher? Well, the assumption here, for example, the S&P 500 is about to open on the 30-minute chart. TRADARS has found an ABCD on the 25 minutes ago. It alerted you to this, so you could already have been playing this game. But you have the up, the down, that's a higher low, which projects a higher high, which then projects a higher low, and then hopefully you get a trend out of it. By the time you get there, if that actually develops, you're going to have a channel. Or in like here, a wedge, right? A rising wedge. But the thing you're looking for is direction. Are you a bull? And if your direction, where are you in the pattern? And you can see buying low and taking it north is an opportunity. Strength, weakness, opportunity, and threat. Okay? So we have on the Dow here, on the Dow 30, we have strength and an opportunity. Very cool. Okay, very cool, right? So it shows you similar things are setting up on the S&P 500. That's good. You want to see the similarities. NASDAQ down to see, that's a little skippity scalp. I'm not really interested. I'm going to pass. Up channel, okay, on NASDAQ on the hourly chart. Okay, again, interesting. In particular, if you're already a bull, you're trying to buy a dip. So you can go to your charts and pull that up and see how that fits into your overall technical strategy. This is just this is a pattern, like, for example, let me just draw over here. Your chart might look like this on a long time frame, right? And TRADARS is just going to say, hey, did you notice this? Now, you can then say, oh, yeah, and in the context of a double bottom, ooh la la, me likey. So this just says, look at this, not that. Pull up your FTSE or pull up your S&P 500 since we're about to open. Do you like the AB? And then what you're doing now is C to D. Okay, and then another dip, and then maybe, D to E, and then E to F, right? That kind of stuff. Cool. So you make a decision, maybe fundamentally, maybe technically. Let's say you're interested in being a buyer of the S&P 500 on the open. Now you can go over here. Check this out. TRADARS is really cool. You go to the vol tool, which does implied volatility. Okay, and you're like, only give me stock indices at the open. So let's say you're hyper-focused on trading stock indices at the open. In particular, you'd like to trade the S&P 500. I mean, you can go even further than that in your filtering and say it's too late for FTSE, too late for DAX, too late for Nikkei. NASI, Dow, S&P, love it. So now we're trading the U.S. stock market at the market open. And on Tuesdays at this time of day, now we have the implied volatility for all of these. So we started with the S&P 500. We saw that there was an A to B, B to C, and we're thinking of C to D, right? On the open. Cool. Well, that's where this stuff gets really interesting. So we have the pattern, which I'll draw in yellow here. We have the pattern that TRADARS saw, right? Okay, I'm going to draw it like a channel because I just see an A, B, we're here. If the pattern fulfills, it just creates this is the A to B, B to C. So we're thinking of, C to D. And then if we get that, we're going to say D to E. And at that point, it's no longer that type of pattern. It's a channel. So we're planning on the channel forming, right? So the general general theory here. Let me drop into a light gray. The general theory is that we develop something like this throughout the day. So now you got 1 hour, 2 hour, and daily targets. 1 hour, 4 hour, 24-hour targets for the S&P 500 based on the theory that the Chinese stimulus package is good and the pattern that you saw technically will have some legs in it, and great. So now we're at an amazing level of detail. Let me get rid of this stuff so we have clarity. That just the next leg is just the next leg in the pattern. The C to D is just this move here, right? And then it shows some downward force and then probably another move. And there inside of all of this, you have the market open scalp. Okay. You have the market open scalp. You have the intraday market open route, right? Intraday. So let's say up for a 4 hour. And then you have the day trade all in one piece. And the interesting thing is when you got the alert, you were here, so you should have all of that piece together. Your first stop, if you will, is just below the 4 hour low. Let's say the day trade stop would be below the daily low. You know that this is the best time of day to make this trade, in particular on Tuesdays. We're not looking at implied volatility yesterday or implied volatility tomorrow. This is today's implied volatility. Okay. Angel says, hey, Wayne, I'm loving traders. Right on. I'm already seeing a difference in my trading, being selective in what I trade. Yeah. Still working on the workflow. Yeah. But having the data. Yeah, which is good because you've asked, 1 million good, even tough questions on Hell, right? Over the last, year you've been a member? Yeah, I'm glad it's starting to click. We have so much resources now in traders.com. Like what I want to do over the next year is improve people's process. We were talking about this earlier when I did the fundamental meeting. Not routine, but process, decision-making process. We have so much information. It's now, what is your process to make decisions? That is such a professional way of looking at trading and investing versus I like to trade euro dollar every day. Right? Yeah. But do you guys see the layers here? That we started with fundamental news out of China. We even have some seasonality that says maybe buying the stock market is okay or buying yen pairs is okay. We have all of that to back this up. But then we go to the next thing is like, do patterns exist to confirm there's an opportunity on things like the stock market or the yens? And so we go and we find a bullish pattern on S&P 500 on a day we want to be a bull anyways. So then we see that pattern and we see that that's good for the next few hours, but how does it fit in the context of what's actually happening right now and what is implied to happen the rest of the day? Okay. And then you say, oh, good. So, this could go from 57 to, 57.57. A little higher than that, but just easy to remember, right? 57.57. Cool. So now you go to your charts and get even more data because you got more data than this, right? So now you go into your charts and you do even better technical analysis. But the thing is, to look at this and to look at this now. And most of your profits are implied to be made in the next 2 hours. So for your intradays and your scalp traders, that's perfect. For day traders, you're probably just popping another one in, and those days are going to turn into swing trades, right? Right? So you're scalping into your market open, or you're day trading into your swing. Then you can take it to that next level. You're like, wait, day trading your swing? Yeah. So then you go into the fundamental section. and you pull up whatever seasonality tool you want. If you catch a trade like that, is it going to last a day, a week, a month? Ooh, Google's slow today. Come on, Google. Maybe it's me. Need to reboot the browser, but I think it's Google because it was slow to load. A couple minutes ago, huh? Here we are. So we have multiple seasonality tools that could be very useful, right? So you go to this seasonality tool. Is that right, JP? Yeah, that's Google. That's the cloud. Yeah. Oh, yeah. Just blame the Russian hackers. It works every time. Oh, it's Russian hackers. Did you hear Russian hackers have been putting bots into all the gambling sites? And just been using AI to beat amateur poker players? Raping and pillaging amateurs? I'm like, that sounds like a normal day to me. I mean, seriously, where do you think most of the profits you make come from? Because you're outsmarting institutional investors? Doubtful, huh? How about, 30,000 amateur traders just degenerate gambling? Yeah, you're like, yeah. Yeah. All right, so we were looking at S&P, right? We were thinking about S&P. How much legs are left if we end up buying today and having a good day trade? Well, check this out. Between September and October, we're going to get an upward move. Now, September's down, but we're in the third week and it's been down. Great. So now what? At some point in the near future, very often, there's upward moves. And what I'm trying to show here, if you're trading the S&P 500 today, and we're almost done with September, therefore we're maybe beginning this, you could be long until like the middle of November. The trade you make in the next hour, you could be long until Thanksgiving. American Thanksgiving, not Canadian Thanksgiving, but you never know. Oh my God, what? Yeah, so an amateur maybe catches that luckily and takes a few points off the S&P 500 today. A professional might say, I'm going to do the exact same thing as the amateur. But once the trade is in, and once I've moved my stop to break even, I will do nothing. So now you're in the same situation. The amateur and the professional entered the same trade on the same asset in the same direction, maybe even for the same reason, but with different intent. So the intraday trader or something picks up 30 points on the S&P and they're like, yay, I'm rich. The other trader does the same thing, takes the same trade at the exact same time, the exact same price. But what they say is, I'm going to let it run for 2 months. But think of this. So everything so far is exactly the same. The effort to get into the trade is exactly the same thing. And then once the amateur takes the 30 points profit, guess what they do next? Let's say on that trade they're done. So on that trade they don't do anything ever again. The second trader did everything the same. But the extra step is they move their stop to break even 24 hours later. Well, the other trader's already done. And now that institutional trader also does nothing. So now the two traders, amateur and professional, are still now doing nothing. They entered the trade the same amount of work. Now they're both doing nothing. And if the professional is correct, because they have good data, they make 1,000% more profit on that trade. Okay? Because doing the same effort, this is the point I'm trying to make. The same level of research, but just, well, I shouldn't say that because there's better research. Okay, but the same effort as far as going to the chart, setting up the trade, and taking the trade. And now it's entered. You don't influence that trade anymore, do you? It's either going to go up or it's not going to go up. Knowing there's a potential of a, let's say, 1,000-point move versus a 30-pip move. Well, that's not effort, that's alpha. So if you want to look at it the same, if the technique of doing everything is the same, but the intent is different, and based on the intent, one trader makes $30 and the other one makes $3,000, then the extra money, $2,970, is alpha. If the tactics are the same, but the strategy is different, then the difference is alpha. And so what is alpha? Your ability to beat the market in that case, right? In this case, beat the other trader. And the only difference is better information, better data, better strategy. And that's the whole thing, I believe, at TRADARS, is knowing when to let your winners run. And it is a profound difference in profitability. Okay, you guys are risk on, so let's check that very quickly. Okay, markets are now open, and no, not yet. Okay, we don't have it yet. Okay, we don't have it yet, but the thing is it developing? Is there an opportunity on that right this second? So we'll go to that S&P 500, and we want to go to a smaller time frame. And then we want to say buy the dip. Hua? Hoorah! Okay. Let me change the direction. I think we are mostly bulls. Okay. Which means you had an opportunity pre-London. Okay, front running the London boys. And now you should be setting up shop atop the Four Season. Okay. That's where we're buyers today. Freed, I'm not sure what you mean. You miss metatraders.com? Yeah. I'm not sure what you mean by on MetaTrader, though. Unless you thought I was on like a podcast with them or something. Okay, so anyway, so we got that defined. Let's go tactical into the Fiver. Okay, we know somewhere in there we want to get long. So now all you have to do is confirm or deny when you do it. Okay. Cool. Now, if you understand correlation and risk on and all that kind of stuff, like Daniel and Don Pablo are talking, you'd also get long the ends. You don't have to trade the S&P 500, not at all, because based on normal correlation, you would be buying dips on these suckers, right? Yeah, for sure. For sure. But like, that was so long ago, right? That's so long ago. It's almost negligent now for someone to want to just start now, right? Like maybe the little pullback here, but even then, like, man, that was 3 hours ago. You can't just be waking up to that now, really? Okay, maybe, right? Okay, so for those that like, let's do this. Okay, and then what? Insert shape. So you have a 618 of that. Oops, where did it go? Insert arrow triangle. Okay, and then if you go from the top to bottom to here, right, you get a 618 of that. And then I believe you harmonics guys like to do stuff like this, right? Am I doing this right? I've never been a fan of harmonics. But the way that I've always understood what these guys are doing is they want a 618 of that. That's about 618. And then they want, I know this is not correct, but this is how I always think of it, doing it my way. Hang on, I'm trying to move this around. Then I always look for this to be a 618 of the other. And if you were in boot camp 15 years ago, we called this fib wars, just to bring it into context. That this zone here is where bulls and bears are battling it out, right? We call that fib wars. Bears are going to sell up here. Bulls are going to buy, have already bought this dip. This is their 618, right? Let's do it this way. Maybe it's easier to just draw it with a drawing tool. For bulls are this move, right? So a bull would buy a 618. That's about a 618. Now bears are looking at this top and they're looking at this drop, and this is their 618. So we always at boot camp call this fib wars, right? And then there's this next one where these guys now, I know this is why I don't trade Gartleys, but you could, now you get this, and this now is supposed to be less than the 786. So 618, 786, and then from that, you're like, oh my God, I can't believe people trade like this. But, whatever, to each his own. Okay. Yeah. So, those are what is anyone a Gartley expert? Does anyone trade Gartleys? Like, that's your thing? You love it? You love Gartleys? You're like, oh man, give me a Gartley all day, every day. It's okay. I mean, I'm not gonna yell at you. But these guys then find, after all that nonsense, all that gobbledygoo, okay, they believe this is a buy, first target, second target, and basically this is a third target. You'd have to fib this again. So much work. Could you make it more complicated than this? Probably not. Okay, so then you would probably, I think it's this way. Yeah, there you go, 1618. Yeah, so it's exactly the same as just buying a daily pivot. But anyways, for those that like to complicate their lives, because, life isn't complicated enough, by all means, right? Burned, right? Burn's like, yeah, either way, it's 60%. Is that right? But whatever. Did I get it even remotely close, Burned? I mean, I've seen it done, trained at conferences and stuff, but I'm just like, really? It's just, yeah. overly complicated. But the thing is, now I want to cover it because TRADARS does spot these for you. Okay. Yeah. Cool, right? So you know what this means to me? That. Buy it at the daily buy zone because you're a bull and you have two targets. Okay? Conservative and aggressive. And it ends up being exactly what the Gartley guys wanted it anyways. But this is easy. Easier than harmonics, right? Oh, very good, Bern. That's really cool. And you're 60, huh? Oh, sorry. So yeah, like exotics, sure. So Fareed, imagine you never had to ask me ever again. How would you like to have access to that kind of feedback 24 hours a day, 7 days a week, without having to wait? So you're like, give me some exotics, okay? And I'm interested in everything and anything you see. Here you go. There you go, Fareed. Okay, let's go further out. Okay, USD Rand, 60 minutes. Does this pair show strength, weak, or weakness? Let's do a SWOT analysis. Does this one right here show strength or weakness? Weakness, correct. Now it also shows, so let's mark that. Yes, weakness. Okay. Is this up arrow an opportunity or a threat to bears? Remember, there's no bulls. If it was bullish, it wouldn't be down. It wouldn't be weakness. So is that an opportunity or a threat? Yeah, it's a threat currently. The opportunity lies above us. Eyeballing, that's 1704. In this case, 1741. Cool. So let's then zip over to the higher time frame. On the long term, does this show strength or weakness in the long-term direction of USD Rand? Strength or weakness? Long term. The other one was shorter term. This will tell us how long we can be in this trade if it develops. That's right, weakness. Okay? Is the leg of the pattern an opportunity or a threat? Remember, it's just the leg in the pattern. It's not, yeah, it's an opportunity. So you say, I'm into this today. The second part is, I'm not in it now, but I intend to be in it in the near future. Anywhere between the current price and 1743, you're interested. So you go to the exotics. Okay. Based on that, 1743 is, oh, you're going to sell it off the daily 21. Great. Now, let's drop into a smaller time frame. Okay. Or even a fiver if you want. Okay. And there's a bunch of different opportunities. But we know up here, so label your chart. Okay. It's your D1 5 EMA. Lovely. Love selling the 5 EMA. Okay. Let's bust that out a little bit. Okay. Great. And so anywhere between where we are now and that, we want to check out a couple of other things a little bit. So oh man, I put it in the wrong spot. My bad. So that's plan A. The smaller plan is in here. It's between the moving averages, and it's a role reversal. So I'm going to break that down now into digestible pieces. Let's see if I can do this one correctly. Boom. That's how I would do if I were me. What do you stink? Smell like a plan? Yeah. Well, hey, big fella, one thing you're going to do is get crushed on carry, so don't hold it over rollover. Okay. Now, if you're in the fundamental training team or Traders Pro team, I already covered Mexican peso to the nth degree in excruciating detail. So, don't need to do it again. But that's how I would do it, right? Yeah, the carry will kill you. It's a massive negative carry. Okay, cool. Let's go back to the U.S. stocks, see how that's carrying out. There's your vol. Okay, we're still back on the line, though, aren't we? Oh, it's the cost of borrowing money. Okay, so let's do this. Let's make up. Trader's Way doesn't have it, but let's say Mexican. No, I guess we can do USD Mexican peso. No, I prefer. Okay, Mexican peso, Japanese yen. This is the easiest. And we will dumb these down, okay? And we'll say interest rates in Mexico is 10%. I know it's 10.25, I think. And Japan will say interest rates are 0. I know that's also not true. Okay? But close, right? Okay, cool. Yeah. So if you have USD in your account and you're leveraged 50 to 1, okay? Which is normal operating procedure in the United States. Okay? $10,000 lets you borrow up to $500,000 worth of yen. Okay? And you have a loan. It's a loan. And it will cost you 0%. So you're not that worried. Great. Now, you have $50,000 worth of yen, which is like 50 million yen, right? Okay, what do you do with the yen now that you borrowed it? See, this is collateral put up for the loan. Now that you have acquired the loan, you have 50 million yen, and then you decided to use the yen to buy 50 million yen worth of Mexican peso. Great. So now you own peso, but you have a yen loan. You don't have any yen, but you have a yen loan. And now you're making 10% annual, right, on your yen, and you have the same yen of this, right, so of 10,000. All right, but here's the thing. You don't get paid the 10% on this. You get paid 10% on this. A $500,000 position you're earning 10% on. Ooh, that's great. Because what's your IRR? 50,000 on 10,000, right? You're earning 500% a year. Internal rate of return on that trade. Just in that swap, what we call carry. Now, you've decided, my friend, to do the opposite. And the opposite is now true. You borrowed peso. Mexico's charging you 10% for the loan, and you decide to convert your Mexican peso into yen, and they're going to pay you nothing. All you make is pips. That's it. But you will pay 10% on the loan. And it's the opposite. And it's terrible and it's bad. Right? So when you're like, hey man, I'm going to go long USD peso. I mean, it's not so bad. But, okay, you're long. So you're borrowing peso at 10% and then converting it to USD, which pays you 5%. It's less than that, but anyways. Okay? And so now you, no matter what happens, just in carry, you're losing 5%, but you're multiplied 50 to 1. So it's nasty. So you would never buy USD Mexican peso and hold it all the way to 5 p.m. You could scalp it. You can day trade it. It's great. You don't have to worry about the cost of doing business. But you should be aware of it. But you would never want to be long USD Mexican peso or short Mexican peso yen for long periods of time. Yeah. It could cost you like 50 pips a day. You're like, what? Yeah. So anyways. So this is TRADARS, what I've been showing you. And I use the Trader's Way platform. So there's TRADARS and Trader's Way, right? Traders.com, tradersway.com. That's the perfect combination, everybody. Okay? Hoodoo? No. No, I don't in particular, no. The cool thing is under indices, I believe it's under indices. Let me turn all that on. Or is it stocks? I guess it's stock. Yeah, it is. Save. All right, let's go back. Under stocks, we have ZN, which is the 10-year T-note. Here it is. Okay? So the 4-hour 10-year T-note. This shows us if we breach below 1450, yields are going to rise. Okay. Yeah. Well, not more history because it's only doing patterns burned. But if it's just hard to see, what I do over and over and over again, I just click open image and new tab. And that helps me see that. But I think what you want to see is more time. No. In this case, think of it this way, Bern. If you're trading Microsoft, all right, let's do this something different. Let's just pick one. The way it's intended to be used is you're like, oh, God, look at that. 20 minutes, you got a heads up. A rising wedge, strength. Okay, buy at the primary support line. Opportunity. Ooh. Oh. Okay, good. Now go to your USD yen. Okay. And see if you believe it's setting up for a buy. It's just pointing you in that direction. That's the intent, right? It's telling you to look at USD yen, and if you're a bull, it's like pay attention, take a look, okay? But what we're trying to do is get you focused on the right thing at the right time. But is it going to open up and do all that? No, I want you to go to your charts and make the final determinations, right? Oh, I did it again. I want to delete that thing. It's this one I want. No, it's this one. Can't get it to quite line up. Oh, I see. Okay. It's kind of like that, right? Not lining up. Anyways. Oh, I see what's throwing me off this line. What the heck is that? What is this? Sorry. Oh, there you go. All right. So later in the day, if you want to be a bull here, you buy. That's all. That's setting up. You should take a look at it. Okay, we're thinking maybe US dollar weakens in general. And in that case, we think more of dollar pairs up than USD yen up. Oops, I keep clicking the wrong thing today. Sorry. There we go. Okay, so what I was saying a couple of hours ago, or what time is it? It's 10. So, yeah, 3 hours ago, we're talking about risk on. I mean, pretty straightforward. So again, covered all of this 3 hours ago. Okay. Interesting. I wonder if you can count that as a Gartley. No, that's too high. So anyways, I don't care about Gartleys. Let's go back to like day trading. The basics of day trading is buy the green zone. But the problem is this green zone is lower than that green zone. So I don't do that. But what could you do? Well, you say, well, this is the buy zone. I wonder if bulls are going to buy. You get a double bottom, reversal pattern at support. Higher high. Okay. Now if you're risk on, what do? You look for the higher low right around this rule reversal. And there you go. And this is 1, 2, 3, 4, 5, 6. So yeah, there you go. That's about the time I did the fundamental training. If you're part of the pro team or the fundamentals team, that's where we were. Risk on, risk on, risk on. Okay. Yeah, so burn, the idea is, not more time and bigger. It's more like I want you to go to your chart and do further. I don't want you to trade that little pattern in of itself. Okay. On hell, when you get to the 21, maybe drop into a 1 minute, at least confirm it with something. But yeah, you could just do it, but there's probably a way that you can reduce the risk just ever so slightly. Cool. So now the trades are like all done. It's now like the next how much it'll follow through, and that again, that's your longer term analysis. But you know what's kind of fun? I think it's fun. You might find it fun. Is then see how much this is normal or abnormal, and again, you can go to implied volatility for that. So we had stocks only. Okay, we can go to Forex only. And look at euro dollar because we're just looking at euro dollar. Okay. And looks like it goes high as 111.20, huh? Okay. 4 hour low to 4 hour high. What is that? Sorry, 111.50. Oh, that's where we are now. Huh? And since we're on Tuesdays at this hour, guess what? The rest of the day we lose volume and volatility. Uh-oh. So now we add a little bit, and this says we can get to 1180. Okay? Which is what? Right here, 1180. So that's based on pivot points. That's my projected high. Based on implied volatility on Tuesdays, that's the implied projected high. But I think what this chart is telling us is it'll go up to here, then it'll come back, and then it'll go up here, and then we're done. And that's probably going to happen right around there. Wow. Dude. The base has no teams, big fella. You have community. You have coaching. Okay? You have access to the courses. So think of it as the swing trading group. Okay? Yeah, right, Jim. Okay, big fella. Were you ever part of the swing trading group? Just think of it as that, right? All the training courses. So like, for example, if you're a base member, you will be attending this afternoon's live stream called Week on the Street. It's today at 4 p.m. Nice, right? Well, what do you mean just? Yeah, it's a base membership. If you're not ready to join a team, you can learn how to trade. You can join groups. You can learn technicals. You can learn fundamentals. You can learn how to simulate your trading. You can ask questions. You can do challenges. Yeah. So I take great offense, big fella. How dare you call it just access? Dude, it's a lot, bro. But, you're going to want to join a team at some point. Okay. Herman, I have my account on TRADARS. Cool. Oh, on TRADARS Way. Why couldn't I connect it? I don't know. You should contact support. Yeah. I know, big fella. No, but big fella, look, the math is actually pretty easy. Look, if you are just learning how to trade, I want you to be part of the community. And we will teach you how to trade properly. I guarantee you that. Okay, cool. So, great. Now, TRADARS base plus TRADARS team, it's the base plus any team you want. So if you just want to do technicals and you think fundamentals are gobbledygook, by all means. So it's more. Yeah. Now, some people want technicals. Some people want fundamentals. And some people want to trade the news events. They want to trade news flow. They want to trade the 5-minute chart, the hourly chart. Okay, scalping and news flow throughout the day. Great. That's perfect for them if you just want to sit and trade with a group. Great. Well, the best deal by far is the pro membership, which includes all of this stuff. It's just everything. It's half price. Okay? Right. So, the question here is, I'm in the swing trading group and the day trading group. And you only see week on the street. Okay, that's the swing trading group. And you only see technical trading team. That's the day trading group. So are you missing something? No. You have exactly the same access as you had. You just don't have to go to 2 different websites. So we meet, practically every day here. And we meet twice a week, although this is going to turn into 3 times a week over here. So that's, okay. That's the swing trading group. Okay, that's the swing trading group. That's the day trading group. This is Quant Box. You see? Swing trading, day trading, Quant Box. Yeah. Yep. See, previously known as the swing trading group. Previously known as the day trading group. Previously known as Quant Box. Okay. So, what you really, really want is TRADARS Pro monthly or annual if you got the moolah. It's even cheaper. right? Another $600 discount if you do annual. All right. Well, that was real. Got to jump, babe. I hope you're loving life and living large. I hope the markets are being friendly to you. I hope there's good trades with follow-throughs and the trends just appear to you like magic. But if they don't, why don't you try Traders? Traders.com. And it'll help you find them for you because it's constantly looking. It's like the Terminator. It's doing good and protecting you 24 hours a day. Yeah. It's never cruel. It never shows up late at night drunk. It just works for you 24 hours a day like a team of technical and fundamental analysts. And of course, you get me, your economist, working on your trading team. So anyways, peace on earth. May the pips be with you. May your profits be above average. I'll see you again soon. Cheers.